tutorcareer.edu. Financial aid is available for qualified students.
If you're living with dry age-related macular degeneration or dry AMD, you may be at risk for developing geographic atrophy or GA. GA can be unpredictable and progress rapidly, leading to irreversible vision loss. Now there's something you can do to
slow it down and get it going slower.
Izervay is proven to slow GA progression.
Izervay gets GA going slower.
Izervay or avacincaptad pagel is a prescription eye injection used to treat GA. Don't take it if you have an infection or active swelling in or around your eye. Izervay can cause eye infection, retinal detachment, or increased risk of wet AMD. Izervay may temporarily increase eye pressure. Your vision may be impaired after an eye injection or exam. Don't delay. Ask your doctor about Izervay today.
Izervay gets GA going slower.
Visit Izervay.com. That's IZERVAY.com.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mark Fandetti.
Chuck, Mark, and Tucker with you here on a Thursday, and continuing just to try to figure out what's going on with the economic data that we're getting, seeing how things are evolving as we go a little bit further into the year. And also, who's trying to figure that out is the Federal Reserve, who had their meeting minutes from their January meeting released yesterday at 2 p.m., And, Mark, anything notable in these meeting minutes that you saw on your end?
They're a little vague because they're not actually minutes, as you know. They're summaries. We don't get the minutes, the blow-by-blow for several years. But the upshot, and this is something anybody who read a headline could have gleaned, is that the Fed understands that they are walking a very fine line. They're always trying to balance the forces of inflation, which are a product of excessive economic growth, and unemployment, a product of too little demand or too little economic growth. And they recognize that they may be walking that fine line successfully right now, but you're always in danger of getting bumped off that line by some outside shock or by a policy mistake. They can avoid the latter if they're wise and lucky. Policy shocks from, say, fiscal policy, a politician saying something, an oil price shock, those are impossible to predict and really tricky to navigate. But I think they've struck the right balance, Chuck, for now.
Do you get a sense in how they're talking now whether they are more concerned about a rebound in inflation or an uptick in unemployment, or does it seem to be fairly balanced concern at the moment? I
think it's the latter, and it's hard to argue with that conclusion. The forces that tend to push inflation up and those that tend to push inflation down, maybe, I say maybe because data gets revised and we never have a complete picture, but appear to be is maybe a better way to phrase it, in balance, as you put it, at this point, as evidenced by stable, though still elevated by many measures, inflation, and very respectable, I was going to say robust, that might be a bit of an exaggeration, but respectable, solid economic growth, particularly relative to potential, Chuck.
When we look at what we're seeing from the economic growth perspective, and again, it's very early at the moment. We have almost no Q1 data. We've had a few reports here and there for January, but again, you and I always like to look at the Atlanta Fed's GDP Nowcast, which, if anyone's not familiar with it, the basic premise of it is they take a number of economic data releases, and as they come out, they make a projection of where economic growth currently stands for the quarter on an ongoing basis. So you can kind of see how it evolves. And again, it's really early right now, so it's not to say that this is definitive or that it means much, but again, it's nice to kind of track the evolution over the course of the quarter, just because, again, I find that it's informative to see, just how the data in the aggregate is evolving. And what we see right now is that GDP Now is currently saying, hey, the U.S. economy is growing at 2.3%. Now, as Mark said, this is an estimate, and really it's kind of like an estimate of an estimate, even more so. So it's not something where you look at this and say, okay, like that's definitively what is going on here. But the evolution of it is that when the first release came out for Q1, it was looking at around a 3.1% print. That was the first one that I have here. It subsequently spiked on the ISM Manufacturing Index, but has come back in. It's now sitting at about 2.3%. And we'll see where this actually ends up, just because, again, it still is very early in the quarter and we don't have a ton of data, but it is something where, hey, if you look at this in the context of where the U.S. economy has been in previous quarters, it is continuing somewhat of a deceleration from where it was in Q3 of last year, and potentially coming down closer to the type of growth that is a little bit more sustainable, given the demographics and other things that feed into growth. The idea that, hey, we can grow the U.S. economy at 3, 4, 5%, it's not really something that I think is possible in the long run, and I think Mark would agree, largely because one of the main factors that leads to GDP growth is favorable demographics and people, more people working, and based on the number of kids that were had 18 years ago, it's just not something that you can get to on a sustainable basis of 3, 4, 5% GDP growth in the U.S. right now. Yes,
that's a key point. 2.3% estimated contemporaneous growth, meaning that is a snapshot, a nowcast, as you pointed out, not a forecast from the Atlanta Fed, is higher than most researchers' estimate of potential GDP. And you may scoff at that concept of potential growth. I saw the new Treasury Secretary on Fox News the other night dismiss it out of hand. Of course, the journalist interviewing him didn't know enough about it to follow up and push back. But it's not a figment of somebody's imagination. It's a product. It's a function of structural forces, like you said, Chuck, labor force growth, how many people there are contributing to the economy, how much they can do in an hour. That's it. Growth doesn't come from anything else. Productivity can be augmented by AI miracles or internet miracles from time to time, but that gets captured in the data. So you can't assume a growth, a positive growth shock, a growth miracle from some outside source is going to save the day. So potential GDP, it doesn't make the headlines a lot, but it's a very valuable guidepost for policymakers and for people like us who have to make investment decisions on behalf of individuals.
Mark, what would it take to, create a world or a situation in which the U.S. has potential GDP growth closer to 3.5%? What do you need in order for that to happen?
We go back to the components, and you already listed them, of potential GDP. It's how many people are working and how much they can produce in an hour. Those two things dictate an economy's speed limit, if you like. Now, it can grow faster at times because of, say, a fiscal stimulus or because of some favorable event like a big drop in the price of oil that makes inputs cheaper and boosts growth. In the 1990s, famously, economic growth sped up because productivity growth sped up because of the pervasiveness of IT, the internet specifically. In the 1970s, and by the way, that 1990s confluence of favorable circumstances allowed us to have very high growth, very low unemployment, and very low inflation. It was unusual. The exact opposite happened in the 1970s. Productivity growth slowed down about 1973. Nobody quite knows why. Labor force growth was high, but productivity growth slowed. Potential growth slowed. Nobody knew it was happening. The Fed didn't know. They thought they weren't stepping on the gas enough. We got, and we're going to talk about this later in this morning's stories, we got, as a result, stagflation. So, Chuck, there's not a lot the government can do in the short term to improve potential growth. They can invest in education, so-called human capital, and they can do things for our so-called social infrastructure, making it easier to do business. This is what the Trump administration talks about when they discuss ways to improve the supply side of the economy. That's an effort to increase potential growth. But if it were really easy to do, everybody would do it.
Let's take a quick break there. When we come back, Mark mentioned stagflation. We'll talk a little bit about a piece in Bloomberg Opinion talking about whether or not stagflation is poised for a comeback, or is that just a bunch of noise?
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, Mark, you touched on it a little bit in the last segment, but there's a piece from Tyler Cowen in Bloomberg Opinion. Tyler is pretty smart dude. He is a professor of economics at George Mason University. I've read Tyler's stuff for, probably 10, 15 years. He tends to take a pretty libertarian view of economics, generally, advocating for less regulation, less, government intervention in markets. And what he points out here is, hey, we've got some concerns about potentially a stagflationary situation that could develop if the Trump administration has bad implementation of the policies that they are suggesting in some cases. And this isn't to say that you will definitively see this, but Cowen simply points out, look, you've got inflation that is still, kind of bottoming at a higher level than you'd like to see. When you look at the inflation data that's out there right now, CPI for the last 12 months is at 3%. Core CPI is at 3.3, PCE is at 2.6, core PCE is at 2.8, and PPI is at 3.5, core PPI is at 3.6. So you're, again, take your pick, but it's pretty clear inflation is running somewhere in the ballpark of 3% right now. And Cowen points out, look, there are some things that could lead to greater inflation, specifically if there are tariffs that are implemented on a widespread basis. Both the additional costs from higher additional imports or additional costs related to reshoring production are likely to push prices up. But the other piece is on the inflation side of things is that the Trump administration is pushing for lower interest rates, which, all else being equal, also tends to push more economic activity out into the economy, and it's unclear that the economy can really handle more economic activity given the demographics and the setup here. So you have potentially some inflation coming from that as well. And on the growth side of things, the question that I think is out there is, look, as much as, I think a lot of us can agree that there is probably significantly too much government spending going on right now, with deficits running 6 to 7% of GDP on an annual basis. If you were to simply say, hey, we're going to reduce that deficit this year from 6% to 3%, as Treasury Secretary Scott Bessent has guided for, you are stripping out a lot of potential demand in the economy, and in doing so, you risk slowing the economy to the point where growth is pretty stagnant, hence the potential for stagflation. Again, I look at this and I say, yes, this is all possible, but this also is why the implementation, the timing, and the specifics of these policies matter, because to me it's not a foregone conclusion that what the Trump administration implements is either going to be good, bad, or neutral, just because we're still, we're a month out from the inauguration right now, so we're still pretty early on. And I think in a number of areas, most notably tariff policy, it still is unclear what those policies are going to look like once they're finally finalized.
Let me make the point he's making, but a little bit more traditionally.
Sure.
And we talked about this in the last segment. The economy, objectively speaking, is strong. Arguably, not everybody agrees, but 75% would, I think, of researchers would agree with the statement that the economy is running a little bit hot. Indeed, that's confirmed by elevated underlying inflation. That's your thermometer. It's registering a slight fever. You'd have to make a really stretched case to come to any other conclusion. So we start with this set of facts.
Sure.
Economy's running in the GDP rate, the rate of economic growth after inflation, that is above what most researchers think is its potential. When an economy exceeds its speed limit, or it's in the red zone, if you want to think about it in terms of your tachometer, not that anybody reads those anymore, that's what pushes inflation up. Demand growing too fast relative to the economy's productive capacity. That's the situation we appear to be in right now. The mistake that the Trump administration might make is the same mistake the Biden administration made, fueling the fire. The sauce has enough chili pepper, if you like, Chuck. I know you're practically a chef. This is an unusual analogy for me. I'm going outside my comfort zone.
I appreciate
but I'm gonna
it.
Try
it's always
it.
good to push yourself.
So when when your wife says you don't put another sprinkle of that whatever, which I don't know, give me what's a seasoning that you could overdo it with?
I mean, you could overdo it with any seasoning, technically, Mark.
Okay.
I mean, you could even have a little too much paprika in there, and all of a sudden it's like,
You've already
what's
lost
going
me.
on here?
You've already lost me. So the economy's seasoned. It's spicy enough, I think, Chuck, is a different way of making Cohen's point. And some of this depends on your ideology. You pointed out, you made an important point at the beginning. People at George Mason, where he teaches, they tend to be libertarian-ish. I can relate. I respect it.
Sure.
That's a little bit his views. The models they use are a little outside the mainstream. You can come to the same conclusion with using our potential growth relative to actual growth or unemployment being too low. Cohen would disagree with that framework, but you can come to the same conclusion using it. I'm going to use the more traditional framework and say that the Trump administration might make the same mistake the Biden administration made, which is over-seasoning the sauce, pushing the economy too much, whatever metaphor you want to use for this. The result might not initially be stagflation. I'm not sure I'm comfortable going there,
Sure.
but it's certainly persistent, elevated underlying inflation such that the Fed has to keep rates high. Look, if that's accompanied by strong growth, is anybody going to care that core inflation is somewhere in the low to mid threes? We've
Probably not.
I don't think so. I can live with that if it's accompanied by low growth because tariffs act as a drag on economic activity. It's hard for me to get there based on what we know today. As you said, we need to see how these policies unfold.
Yeah, and look, we're still at a point right now where on the tariff side, everything is increasingly being pushed out to kind of the start of April. The one thing that we may see sooner is the situation with Canada and Mexico getting a more full resolution, simply because that was a 1-month reprieve on tariff implementation at the beginning of February. So in a couple of weeks, we should start to we should have some news on that front. And I think the big question is going to be the implementation of these items. I saw a report last night that the Trump administration is considering a 25% tariff on lumber products. And one of the questions that you get to then when you're talking about Canada in particular is, okay, if you do impose a 25% tariff on Canada, is the 25% tariff on lumber products in addition to that? And so are you talking about something closer to a 50% tariff on imported lumber from Canada? These are things that we just don't know yet.
Head spinning.
And so it's just something where the fear that I have in the short term is just from talking to more and more business owners, they're just not sure how to operate right now. And we saw this, by the way, in the National Association of Home Builders Index yesterday that came out, where there was a 5-point drop in that index, and it was largely related to builders having concerns about future ability to build and sell houses. And so if you're a builder that's concerned about these things, you might say, okay, am I going to pull fewer permits? How do I handle my pricing? What do I do on this? And I think the part that you get to in my book is, okay, if you're trying to implement large changes economically, I generally view the best time to do that at a time when the economy is hot and inflation is, at least somewhat under control. The longer you go with uncertainty on tariffs, the more the economy potentially slows, and now you're running into, the question of, okay, has the economy slowed so much that, the tariffs are the thing that pushes the economy over the edge? We're not there yet because we just don't know, but in theory, you want to conduct big changes from a place of strength, not when the economy has already slowed. And I think some of the uncertainty on tariffs and other policy is pushing a little bit of slowing in the economy. Nothing huge that we've seen to this point, but a little bit that's there that makes it a little concerning from my perspective.
Oh, that's the case for stagflation.
Well, I don't like that. I wasn't going that far. Let's take a quick break here. When we come back, we got Wall Street Watch, and then Walmart reported earnings yesterday. We'll tell you what this morning, we'll tell you what they reported after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in negative territory as Wall Street reacts to disappointing forecasts from Walmart, as they've reported this morning. Right now, the Dow is off by nearly 1%, or 418 points. S&P 500 is down over 0.5%, or 35 points, and the Nasdaq down by 0.2%, or 136 points. Russell 2000 pulling back by 1% as well. 10-year Treasury yield down by 2 basis points, now at 4.50%, and crude oil up about 0.6%, trading at $72.68 a barrel. Walmart skidding by 6% after the retail giant offered weaker than expected guidance, with the company sees earnings per share ranging between $2.50 and $2.60 per share, below street forecast. Walmart also said it wouldn't be immune to impacts from currently postponed tariffs on Mexico and Canada. Other retailers, including Target, Dollar General, and Dollar Tree, are also seeing sympathy losses in reaction to the news. Chuck and Mark will have more on Walmart coming up here in a matter of moments. Meanwhile, after its 10% plunge yesterday, Palantir stock down another 10% today. The downward move comes after the Washington Post reported that the U.S. is readying to cut its defense budget by 8% annually over the next 5 years. Separately, Palantir unveiled a new stock trading plan. Elsewhere, Alibaba shares jumping nearly 11% after the Chinese e-commerce giant posted better than expected quarterly earnings and revenue. Carvana stock down by 14% after the online used car seller posted stronger than expected earnings. However, revenue per vehicle fell in the previous quarter. Shake Shack beat quarterly earnings forecast, sending that stock up by 11%. The fast food chain saw its revenue climb 14.8% year over year and also opened 19 new company-operated locations. And Wayfair shares down by 2.5% after the online furniture retailer beat fourth quarter revenue expectations. I'm Tucker Silva, and that's Wall Street Watch.
Mark, as Tucker noted, we saw Walmart report their earnings before the bell this morning. And basically what we saw here is that they are anticipating full-year profit coming in between $2.50 and $2.60 a share, below estimates. And so Walmart's stock at one point this morning was actually down, I think I saw like 8 or 9%. It's now down about 5.5%. And overall, I think if you read through like the actual data here, the quarter was actually pretty good, and some of the reduced guidance is for just things in terms of how the calendar sets up, at least this, in the upcoming quarter and things like that. But overall, this is a company that still is showing, pretty good overall growth rate. And I think the bigger thing that I see with Walmart, quite honestly, and it's kind of wild to say this right now, just because it's normally such a boring company, I think, quite honestly, they just got a little bit out over their skis as far as the valuation, which is not something that you normally see from a Walmart. But just to give you a point of context, Walmart right now is trading at 35 times forward earnings. If you look at its average for the last decade, just as an example, it has averaged a forward PE of 25.6, and that's even including a period in the last year where its valuation has gone up significantly. And again, 35 times earnings. Microsoft, just as an example, is trading 31 times forward earnings right now. So Walmart on an earnings basis is being valued more steeply than Microsoft is right now. And so I think part of this is just, as so often happens, hey, if the expectations are sky high, you can come in just fine and still get punished for it just because just fine isn't good enough to deal with those kinds of expectations. Your thoughts?
Yeah, it's being priced like a growth stock because of the unbelievable, in fact, growth in sales over the past 5 years. Just for perspective, from 2010 to 2020, sales grew, and I'll just do this on an annual basis. The cumulative number is a little over 30%, but the annual, if you want to look at it that way, is 2 and change % per year, or about the same pace as the economy, which makes sense given their big diversified lineup and their national presence. Makes sense to me anyway. So that's the growth in sales, 2 and change per year. That's a 10-year average. In the past 5 years, then that 10-year average was, again, 2010 to 2020.
Yep.
In the last 5 years, the growth rate has been nearly double, 4 and change.
Yeah.
Cumulative growth over the last 5 has been the same, again, in sales, as the previous 10. The growth has been absolutely spectacular. So the multiple that you quoted, the growth stock-like multiple, makes sense from that point of view. I think the question is this sustainable or just an overhang of all the COVID stimulus? Hard to say, right?
Yeah. It's something where, if you look at, and again, I'm just pulling it up right now, so I don't even know what I'm going to find here. But if we look at U.S. CPI again, this is completely on the fly. I have no idea what I'm going to find, so this might be useful or it might be completely useless. Over the last 10 years, U.S. CPI has averaged 2.9%. So kind of matches with what you said, Mark, which is not even like the overall U.S. growth rate. Like Walmart sales have basically tracked the inflation rate over the last 10 years.
That's a better example. Thank you.
In the last 5 years, U.S. CPI is running 4.21. So again, you kind of look at it and you go, okay, what I think a reasonable case here is, and again, this is one data point, but I think you can point to it as, hey, Walmart is able to pass along its costs to end buyers on a pretty consistent basis. The actual growth in sales and how much stuff they're selling beyond that is, I think, a more open-ended question. Is that fair?
Yeah, you're right. I didn't adjust my little percentages there in my drawn-out exercise for inflation. The period I was looking at, yeah, it's fair. Let me end right there rather than throwing more numbers out there without thinking more carefully about it. Look, it's impressive. I'll just leave it at that. Given their size, to grow at this clip.
Oh yeah.
And to be growing multiples instead of seeing multiples gradually settle down to something that you'd associate with a staid a consumer staples company. They probably don't think of themselves that way, but that's sometimes how I think about it. It's just really impressive.
And looking at again, I'm just kind of looking at some of the other pieces in this earnings report to sort out like what's actually going on here. They guided their margins in particular. They guided a little bit weaker this year. But their advertising business is growing pretty darn quickly. Their advertising at Walmart.com is up 29% year over year. So they're seeing something pretty good on that side. Traffic, their comps, year over year comps came in at 4.6% growth. That's down from 5.3% in the prior quarter. So a little bit of rolling over on that side. But again, still a pretty good clip that you're seeing there as far as same-store comps. Gross margin was up as a result of the advertising revenue. Web sales, like what percentage are coming through Walmart.com as opposed to in-store? 18.8 of their sales coming from Walmart.com. That's up from 16.5 last year. So they are seeing some pretty good traction on that side. And let's see. The other big thing, remember, 60% of Walmart sales are groceries. Like people often forget that Walmart is the biggest grocery store in the country, and it's not even particularly close. More than half their revenue comes from groceries, and that's not revenue that goes online very easily. So if 19% of sales are coming from online and 60% is groceries, you're probably pretty close to 50% of your non-grocery sales being bought online at Walmart.com for them.
Have you heard any chatter about how cuts to SNAP, Supplemental, Nutritional Assistance Program, also known as food stamps? I've heard, and you tell me if this is on point or not, or true or not, that a fifth or so of their sales is accounted for. Now, I don't know if that's fifth.
It's because of the grocery business, yeah.
Okay. So if SNAP is cut, and it almost has to be for Republicans to achieve their deficit objectives, how does that affect, this question might be rhetorical, might be premature, how does that affect Walmart sales?
If you actually see, meaningful cuts to SNAP benefits, it's going to have a meaningful impact on Walmart revenue and profit. How meaningful, I don't know. I haven't studied the numbers well enough, but it absolutely would. It's a huge business for them. Let's see. So that's Walmart and what we're seeing on that side of things. Let's take a quick break here, and when we come back, we've got a piece from CNBC that we're going to be covering. The earnings picture for stocks is deteriorating. How worried should investors be? Well, we'll let you know right after this.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Oh, what a night. Join me on Sunday, March 2nd for the 29th Annual Ellie Fund Red Carpet Gala at the Omni Boston Seaport Hotel. Hi, this is Candy O'Terry, honored to accept the Ellie Fund's Ellie Popkin Award with WCVB's Karen Holmes Ward from this beloved nonprofit devoted to breast cancer patients and their families. EllieFund.org, that's EllieFund.org, and don't forget to wear pink.
If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you, too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Mark, piece on CNBC today. The earnings picture for stocks is deteriorating. How worried should investors be? What's the case they lay out for the earnings picture deteriorating?
Well, there are a bunch of, I don't know if they're one-off examples. I'm going to call them one-off because I don't see anything systemic here.
I don't either.
Right. So the big picture is this. In any given year, the return on the S&P 500 or whatever your favorite benchmark for U.S. equity market performance can be broken down into two components. I'm oversimplifying a little bit, but one is earnings, how much they went up or down. The other is how much investors were willing to pay for future earnings. That can be expressed as a multiple of earnings. PE ratios are one example of a earnings multiple, and there are lots of them. So the point the article makes is, well, if earnings decline from last year's pretty torrid pace, and I forget the year over year, but what were we in the mid-teens for 2024 as the final tallies being?
So what I have so far, and this is, again, we're still not quite through it just because like NVIDIA still has to report next week. But calendar year 2024, we've got 10.2% earnings growth on 5.2% revenue growth.
Oh, yeah, I was way off. Okay, so even worse. So stocks were up somewhere in the mid-20s. I forget already. If earnings end up around, call it 10%. I'm rounding down, I guess. The rest was what you'd call multiple expansion in the price investors are willing to pay for future earnings as measured again by PE ratios. So suppose earnings declined from 10% last year to 5% this year. Is that necessarily bad news for equities? Well, we'd prefer higher earnings, that's for sure, but it doesn't mean that investor enthusiasm for equities will ebb to the point where, I don't know, it drags down returns. Their willingness to take risk as manifested in growing PE multiples might more than make up for that. There have been plenty of years when earnings were soft, lukewarm to flat or even negative. But investors' willingness to take on risk, again, as evidenced by higher PE multiples, made up for that.
And when we look at that, I think ultimately the question that investors ask is, hey, how long could the downturn in earnings last? How deep could it go? And that's, those are the things that you look at as you're trying to sort through that type of situation. Folks, the Armstrong Advisory Group has a guide available this month. It is titled Understanding Medicare, Essential Questions Answered. Medicare is, look, it's a huge government-run healthcare program, and when you get to age 65 is when most people typically are required to apply, and you can have a lot of questions about it because you've never done it before. This is not something where you sit there and say, great, based on my experience, I should do X, Y, or Z. Instead, you're entering an entirely new program that you've never participated in before. So you probably have some questions. Heck, even if you've been enrolled in Medicare for a couple of years, even a decade, you might still be wondering, gee, am I getting the most bang for my buck? Do I really understand how all of this fits together with all these different parts? I got Part A, B, C, and D. I got Medicare Advantage plans. How does it all work together, and am I getting the best deal I can? So, this guide helps to answer those questions. It's titled Understanding Medicare, Essential Questions Answered, and the way to request it is by calling 800-393-4001. That number is 800-393-4001. And that's for the guide Understanding Medicare, Essential Questions Answered. One more time, that number is 800-393-4001 to request the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in Bloomberg talking about how the first month of the Trump administration has actually produced some interesting results in terms of, hey, what markets are performing better than others. The trend over the last 15 years or so has really been that aside from a few small instances, U.S. markets, specifically the S&P 500, have dominated international markets. Today, we're kind of seeing that reversing in a few areas where you've got European markets that have been strong, Chinese markets have been strong, other emerging markets have been pretty good, and overall, the ACWI ex-US index is up about 7% so far year to date, while the S&P 500 is up about what do we got, like 3.75% as of today. So it's kind of interesting that, hey, for investors who said, okay, Trump is going to be great for American stocks thus far, and again, look, it's been a month, so like it always kind of bothers me when we write these pieces, not we, but when people do, about, hey, like, the first month of this has, shown this. It's like, okay, like, talk to me in like a couple of years. But at least initially, what we have seen year to date is international markets in a lot of cases outperforming domestic U.S. ones.
Probably shouldn't surprise. Chuck, you pointed out that they've been in a historic drought. There were decades, the 70s, the 80s, when international stocks did spectacularly relative to U.S. And subsequent to that, of course, institutional investors, people who invest on behalf of pension funds and college endowments and stuff like that, piled into them. Probably got a little ahead of themselves. That, of course, when something gets expensive, that lowers future returns. The more you pay for something today, the lower the yield over time. It's true of a stock. It's as true of a stock as it is of a bond or anything else. So possibly we're still. This is not something I'd hang my hat on, but possibly the exuberance of those 2.5 or so decades, this went on right through the 90s, is still burning off a little bit. I'm not sure I believe that, but I'm trying to come up with something. So international stocks have gotten really cheap, as you hinted at, and they were bound to turn around at some point. Do we have enough evidence to say that the turnaround has finally arrived?
No,
of course.
not at all.
But when some politicians, and I'm not going to name names, Donald Trump, to say they're going to fix this, that, and the other on day one, it does start to set expectations for evaluation on a very short time frame or a very high frequency. It is fair, I guess, to judge a politician by where inflation or growth stand today when they promise to fix it on day one. I could be grasping at reasons why people are trying to extrapolate from the past 5 weeks with respect to stock market or inflation or economic data, but it's possibly because politicians set these crazy expectations for miracle cures on day one.
Yeah, I just think it's too early to be able to say whether this is anything conclusive or not. I mean, I still remember, Tucker loves when I bring this up. Last year, we had like the first 3 days of the year down, and everyone was writing, this is going to be a horrible year for stocks, and it turned out great. So I try not to read too much into the short-term moves here. Quick break, hour 2 of the Financial Exchange coming up in just a bit.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have: how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for an example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mark Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mark Fandetti.
Hour 2 on the Financial Exchange. Chuck, Mark, and Tucker with you. And just a familiar story. The S&P 500 gets to, 6130, 6140, and promptly decides, water's a little cold up here. I'm going to head back down somewhere else. And so we got markets selling off a little bit today with the Dow off 581 points, the S&P down 53, and the NASDAQ down 182. So about, a 1 to 1.25% pullback on your major U.S. indices, which continue just to chop in like a 6% range since the election in November. So we're closing in now on 4 months where this has been the case, where we just have not been able to get any momentum past that 6,100 mark on the S&P 500. And likewise, we haven't fallen apart or anything. It's just hanging out, just kind of chopping along, not really going anywhere in any hurry. And I think that is the continued story until proven otherwise right now. 10-year U.S. Treasury is down 3 basis points to 4.505%. Oil, West Texas Intermediate, up 41 cents a barrel to 72.66. AAA national average for gas prices up 0.1 cent to 316 and 5/10. Again, normal seasonal shifts, you would expect this number to get into that 330 to 340 range over the next month or so, just because of how refineries shift their blend of fuel and maintenance and this and that and everything. So you typically do see a little bit of a rise in the spring. It's not really due to anything other than typical seasonality associated with gas prices. Finally, we've got gold up $19.20 an ounce to $29.55. Gold is still, trying to find a way to get above that 3,000 mark, but running into just a little bit of a bump here over the last few weeks as it tries to do that. Still can't quite get to that mark, but it's been a heck of a run over the last year, with gold going from about 2,000 per ounce this time last year up to about 2,900 this year. You do the math out, you're saying, okay, that's like 47% move that you've seen upward in it. So gold investors have been rewarded significantly over the last year. Mark, we got another one here from Market Watch. U.S. stocks are back at record highs. Is it too late to chase the bull market? Who the heck knows? I have no idea. No one knows if it's too late to chase the bull market. And this is the thing about expensive markets, is they can stay expensive for quite a while. Mm-hmm. In the 1990s, Alan Greenspan had his famous irrational exuberance speech back in 97, right?
December of 96.
96.
Close
so
enough,
even
right?
Earlier,
Yeah, I think it was December of 96.
In that ballpark. The irrational exuberance persisted for 4 more years until it finally broke down. And so I don't know. Everyone always likes to be like, well, what inning of the rally are we in? No one knows. No one knows, and it's because no one knows what's coming down the road that might affect things in an unpredictable way. Sure, if everything continued to move predictably, you could say, okay, yeah, this is what I would expect, but human beings are not always predictable. We kind of do irrational things sometimes, and so, is it too late to chase the bull market? I don't know. I have no idea. What I can tell you, and this is whenever I get asked these kinds of questions, I come back to one very simple principle, which is, look, regardless of where you've been to this point in terms of how you've been invested, if you have expenses that are coming up in the next few years and that money is in the stock market, that money shouldn't be anywhere near the stock market, because you never know when there's a 15, 20, 25% dip that's coming. And so if you've been saving money for a down payment on a house, or if you've been saving money for college, or if you've been saving money for a car, whatever it might be, and you happen to have done pretty well in the market, man, it's don't look a gift horse in the mouth, because it's just something where you never know when things are going to fall apart. And so the general principle is, look, if you got expenses that are coming due in the next 1 to 3 years, that money shouldn't be in the market. I know it's going to be boring to sit in a bank account and earn 3% a year or something like that, but ultimately that's how I look at this. Is these times they can be a reminder of, hey, if I've done well, maybe I think about am I taking too much risk given when my liabilities are coming due. But as far as, hey, have U.S. stocks, is it too late to chase the bull market? There's no one on earth who knows for sure.
Yeah, it's a really dumb headline and an equally dumb question, I guess.
It gets clicks.
Yeah, it does, and we can't forget that's what they write these headlines for. I think you already covered all the main points on this topic. I'll just embellish a little bit on one point, expand a little bit on one, or state something differently, whatever. Big pullbacks are totally normal in equities, and 15, 20% swoons used to happen every 2 or 3 years. That's in fact what you would expect, just due to forces of random chance. So you could say we're due. It's been about 3 years, but to the point you made earlier, whether you're talking about economic expansions or bull markets, there's no relationship between their duration and the probability that they're about to end. Sophisticated methods have been employed to try to arrive at some sort of relationship. Do expansions get old in the tooth? And the answer is no, they don't appear to.
What I think
long
you
in the
can
tooth. Excuse
say,
me, long in the tooth. Pardon
what
me,
I think
Chuck.
you can say is high valuations do represent the potential for more pain when issue comes. But you never know when. You never know when that's going to be. And so, I still remember when I first started getting into this business. I still remember it was like 2011 or so, like somewhere in that ballpark, and the Dow Jones had just crossed. I want to say, I want to get the numbers right. Yeah, it just crossed like 13,000 in 2012, and I was talking with someone, and they're like, I can't buy the Dow at 13,000. Like, I'm gonna wait for it to pull back to like 10 or 11 again, and then it's gonna be time for me to invest. And the Dow never pulled back to 10 or 11 again. It never saw those numbers again. But also, like, you think about it, and hey, if you didn't want to invest at 13,000 because the Dow was too high, well, then it went to 14 and 15. Look, we're sitting here now at 44,000, and sometimes I sit back and I wonder, hey, those people who were nervous about, investing because the market was too high 10 years ago, did they ever invest? And again, I think this is what I always come back to in markets is, look, the short term, you never know what's coming in markets, and even in the long term, if we're being completely intellectually honest, you never know what's coming in markets. But there's a long track record of companies in the long run in the United States being able to increase their earnings at a long-term compound annual growth rate of about 6 to 7%. And if you look at that and say, look, regardless of what happens in any one given year, month, heck, even in a decade, I mean, the 2000s were a horrible decade for stocks. And even despite that bad decade, you still have seen long-term returns be very robust as far as U.S. equities. Is that going to continue forever? No. It's there's no law of physics that states that U.S. equity markets have to return X. And so you could have, at any point in time, like the next 2 decades, maybe you return nothing in U.S. stocks. I don't know. But ultimately, for you to return really nothing in U.S. stocks, you have to think about, okay, over a 20-year period, what has to change in order for that to be the case? And there's some meaningful problems that would have to develop. It's not to say it hasn't happened elsewhere. I mean, again, even in the U.S., you've had decades where stocks have done nothing. But that's why when we talk about investing in stocks, you're not doing it for a week, a month, a year, or even for a decade. You're talking about, I want to be investing in these for 20, 30-year periods, not the specific stock, but just the idea of a broad basket of U.S. stocks.
Yeah, the structure of the economy would have to change pretty dramatically. I'm not saying it couldn't. We've got politicians talking about helping to set interest rates, i.e. depriving the Fed of its independence. Others who want to radically restructure our social institutions, both from the left and the right. The more change, no matter how necessary you think it is, the more likely you are to kill the goose laying the golden egg. So, be careful what I'm not lecturing anybody. I'm not qualified to, and I'm not saying anybody harbors these types of wishes, but be careful how radical a change you wish for. Our present constellation of institutions has made for an environment conducive to a reasonably solidly growing economy and strong stock returns.
You ever killed a goose, Mark?
Don't lie.
I've never eaten a goose. Why would I? Under what circumstances? Like one of those annoying Canadian geese that makes its way into my yard? Are you accusing me of killing it?
No, well, we were talking about killing the golden goose.
Oh, killing, yeah. No, I have no experience killing a goose. I wouldn't know how to do it. Well, you wring its neck, I assume. They got those long necks. You just snap it.
It's a big neck.
Right?
It's a big neck.
But it's a pretty big target.
You've never eaten goose?
I don't think so. Like, what is it called?
Foie
that paste that the French make?
Yeah, I'm not a fan of that, but like actual goose, I enjoy.
No. Where do you get a good?
What's that?
I haven't had actual goose.
Actual goose is fantastic.
Really?
Huh.
It is fantastic.
Okay.
But the foie gras, no, I don't enjoy a number of things about that. The actual taste and texture of it, the idea that, hey, we made this because we basically force-fed an animal to the point where its insides started to break down. Kind of problematic to me.
Yeah.
But that's neither here nor there. Let's take a quick break. When we come back, we'll do some trivia, and then we'll talk bonds right after this.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699, or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit. when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025. Time now for trivia here on the Financial Exchange, and today is basketball legend Charles Barkley's 62nd birthday. Barkley spent 16 years as a player in the NBA, becoming a Hall of Famer back in 2006. Trivia question today: how many teams did Charles Barkley play for during his NBA career? Once again, how many teams did Charles Barkley play for during his NBA career? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, we got a piece in the Financial Times. It's titled, Will the Bond Market Rein in Donald Trump? And what it's talking about here is, hey, if you were to see, policies that are inflationary and actually like generating an inflationary impact implemented, it's the potential for the bond market to sell off, not necessarily the same way it did in 2022. But obviously anytime there's inflation, the idea is, hey, the Fed's going to have to raise rates in order to stem it. And so the question that's posed by this piece is, look, the 10-year's basically been sitting in a range of about 4 to 4.5% for the last, 6-7 months now. And, hey, if you were to see policies enacted that were inflationary, would you see the bond market sell off as a result? And how much does that put additional pressure then on the Trump administration in order to reverse or modify those policies?
Sure, it's possible. You don't know that policies are going to be inflationary. Could, that is, constrain the economy's ability to meet growing demand? That's another way to phrase it. Until after the fact, tariffs could be inflationary or stagflationary. They could act to slow growth and increase prices, as we talked about in the last hour. I don't see much in terms of indication in financial markets using, for example, the break-even inflation rate, which you can calculate using differences in yields among Treasury bonds that aren't and are indexed for inflation. It's up a little bit since the election. Not much, though. Not anything that would get your attention and ask, oh, gee, what happened? But sure, Chuck, if the markets at some point think that, deficits are going to spiral out of control, that's my personal guess, by the way, so I can argue this with a little bit of enthusiasm, if not any facts at my command yet, because we simply don't know. But I think deficits will be bigger 1, 2, 3, and 4 years from now, and 8 years from now, for that matter, if we stay on the current trajectory than they are today. All else equal, that should put upward pressure on interest rates. Then there's the inflation component that you brought up, which could separately put pressure on interest rates.
In terms of how reactive this Fed will be if there were an increase in inflation, do you have any guidance based on kind of what they've seen historically and how they've behaved as to where the Fed may start saying, hey, we need to hike rates again? Like, at what point does that become a concern for them?
It hasn't happened much, thankfully, in the post-Paul Volcker, roughly 1979 to present era. Sure. The most recent test was 2001. The Fed diagnosed that as primarily a supply problem.
2021, you mean?
What did I say?
2001.
Yeah, 2021, thank you. The Fed diagnosed that as a supply problem and hesitated to act, delayed in hiking rates. I'm not sure it made that much of a difference on the margin. It may have kept inflation expectations high and delayed the disinflation process that we ultimately experienced. But the next shock, if you like, and it may not be a shock, it may just be uncomfortably high underlying inflation due to an economy that's running too hot. The Fed has reacted in different ways to that in the last 40 plus years, 40 or so years, again, the post-Volcker era. Greenspan famously at times kept his powder dry, was willing to let things play out. The next Fed chair, if it's not Powell, might, with the experience of 2021, 2022 in mind, act a little bit more preemptively. It's really hard to say, Chuck. Will they act resolutely, with conviction, and with a severe enough push against excess demand to staunch inflation if it starts to rise? Well, it's already elevated. If it resumes its rise from currently elevated levels.
Taking a look at markets as we head towards the bottom of the hour, the Dow is off 593 points, the S&P down 50, the NASDAQ down 173. So all three major U.S. indices still down anywhere from about 0.8% to about 1.3%. If you look at the S&P, like, hey, where's the damage being concentrated? Walmart with, kind of a pretty meaningful loss on the day, down about 6%. You got Tesla and Amazon down 2.3 and 1.6% respectively. Mark, why is every bank getting whacked today? What's going on in financials that is causing? Like, I haven't seen any news related to financials, but you've got.
Oh, good. I thought it was a trick question. Does he expect me to know this? Where's the story?
I
don't know. Why are stocks down? Why are stocks down 1%? I mean, you're looking at the Dow.
Well, I don't know. Like, we just put them through a random number generator and they went down, and then we make stories up after the fact.
A lot of it is just random.
Yeah, but I'm trying to figure out why financials are selling off, and I don't have anything.
Rates are coming in. I don't know.
Notable, but I mean, they're coming in, but not that much.
Modest, normal variation.
Yeah, so you got financials selling off. Healthcare is moving on up a little bit, and again, overall, you got a modest sell-off happening today. Nothing huge, nothing crazy, but a modest move down. Quick break. When we return, we've got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, how many teams did Charles Barkley play for during his NBA career? That'll be 3. He started his career with the 76ers before being traded to the Suns, where he spent 3 years there before getting traded to the Rockets in 1996. Winner today of the Financial Exchange Show t-shirt was Randy from Eastham, Mass. Congrats to Randy, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, we got some news from Microsoft yesterday.
I saw that. Didn't know what to make of it. Go ahead.
They said they created a new state of matter to help with their quantum computing push as they revealed their first quantum computing chip. And this is where I'm fully and completely over my head. So this is what I've pieced together just from trying to understand what's going on. Quantum computing is the principle that normal computers operate with billions of transistors on different chips, and a transistor is simply something that is either a 1 or a 0. It's binary. It's open or it's closed. And basically, in order to do complex things, you have to cycle through different permutations of which ones are open, which ones are closed, millions and millions of times. This all happens every second, millions of times. Great. Quantum computing is, hey, a quantum transistor, or a qubit, as you can call it, can be both a 0 and 1 at the same time. It's kind of like you've got your feet in a cold tub, and your head is next to the oven. Like you're hot and cold at the same time. You're not quite sure what to feel, but you're feeling both of them. So, Microsoft is, they said they created a chip that uses this new state of matter to help build quantum computers. And it uses what they are calling a topological superconductor. A topological superconductor, it's not a solid, liquid, or gas in order to produce this chip that can be scaled up into a quantum computer. They've named this chip the Majorana 1. And Majorana, if you're not familiar with him, which I wasn't before today, so, it's not something where I had any idea what was going on here. But he was an Italian theoretical physicist who lived in the first half of the 20th century, like 1906 through like 1960. No one's quite sure when he died. His death was a quantum event, I guess. I don't know. But in any case, so they named this after him because he had, come up with these different theories about, different substances and yada yada. And so it's named after like the particle that he thought might exist that they think might have created, called Majorana fermions. Fermions. That's right. We're dealing with this right now. And just to tell you what Wikipedia says about this, because again, I have no idea what I'm talking about here. In particle physics, a Majorana fermion, or Majorana particle, is a fermion that is also its own antiparticle. A Majorana fermion is a fermion that is also its own antiparticle. So, basically they're saying that, like, it can, like, annihilate itself somehow. I don't really know, but somehow Microsoft is saying that we made something like this to help with our quantum computer. What I still don't understand about quantum computers is why they look like these like chandeliers for some reason that are all made out of like gold and then clear wiring. I don't know, but again, I'm sure there's something there. But continuing to get, more drip, drip, drip about quantum computing, the big thing is that this is still like very early on. This chip they developed has 8 qubits. And they're saying that in order to get this like useful for like real, improved computing capacity, you need to be able to build chips with like 1 million qubits. So they're a little ways away, given that they've made one with 8. But again, kind of some interesting news, and Majorana fermions, Mark.
Yeah, this is exciting. You know what I'd like from Microsoft is a version of PowerPoint that doesn't require that I format every single slide when I want them identically, that I have to do them individually. Can we start there with a little animated clippy that's actually helpful?
The theory of Majorana's fermions goes back to his suggestion in 1937 that electrically neutral spin 1/2 particles can be described by a real valued wave equation and would therefore be identical to their antiparticle because the wave functions of the particle and antiparticle are related by complex conjugation.
Yeah. I want Microsoft Word to stop suggesting superfluous words when I know what I want to say. That's what I want out of Office, Chuck. I don't care. I don't know how many fermions that's going to take.
You want that, you get a fermion.
I don't care how many damn fermions it takes to make that happen. I want I want the Microsoft Office suite to be slightly easier to use than it was in 1996.
You will get fermions and you will like them.
I just picture like somebody like Chris Farley speaking on behalf of Microsoft, being like, "What I'm trying to tell you is our quantum computers are really cool."
Yeah.
You want fermions? We've got the fermions.
But Chuck, doesn't it? This is
how many
like,
do you want? 1 million? 2 million?
For someone that doesn't have a PhD in physics, or what? Like, this is an undergraduate. Maybe this is undergraduate physics. If you're a major, you certainly don't get this in the survey course.
This isn't undergrad physics.
This
guy died, and they never even knew these existed.
Yeah, that's a little weird and creepy too. Nobody knows when he died. This whole story's got suspicious elements to it.
It's on March 25th, 1938. He disappeared under mysterious circumstances after purchasing a ticket to travel by ship from Naples to Palermo.
Yeah, he slipped into the Tron computer.
He's
been
in the
racing,
quantum realm.
Light cycles.
He's in the quantum realm.
Yeah. Again, I just want PowerPoint to take. I want it to take less than an hour to format a PowerPoint presentation respectably.
We'll have a team of fermions sent over to work on that.
If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics. and it'll help you create a plan that can help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for more than 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
So, also, this guy's uncle was a physicist, too. I'm sorry, but this is just wild that this is all in one family.
Yeah. Do we know if he died?
He did, on July 31st, 1957. His name was Quirino Francesco Valentino Majorana. And he performed, this is all Wikipedia, so I'm take it for what it's worth. He performed a long series of very sensitive gravity shielding experiments. Gravity shielding. His experiments determined that mercury or lead around a suspended lead sphere acted as a screen and slightly decreased the Earth's gravitational pull. So he thought that you could reduce gravity using lead.
Yeah, then somebody told him there's no use for that.
No attempts have been
Gravity's
made to
handy.
reproduce his results using the same experimental techniques, but other researchers have concluded it from other data that if gravitational absorption does exist, it must be at least 5 orders of magnitude smaller than his experiments suggest. He also was critical of Albert Einstein's theory of relativity and tried to disprove it, and he failed, and therefore his experiments actually proved Einstein's postulate. This is wild.
Yeah, now I'm starting to think Elon Musk is onto something, firing all these researchers. If this is,
how do we get this guy to work for us?
What would prompt you to want to, I'll just call it cancel, to neutralize gravity?
Aside from everything?
Maybe there are experiments. Okay.
You don't think anti-gravity would be useful?
I guess if there are experiments you want to do in a gravity-less environment, this would be helpful. It would be. So I'm obviously speaking of a position of huge ignorance, more so than usual here. But
I think of it much more from the perspective. Think about what you could do for air travel if you didn't have to deal with gravity. Because most of the fuel that you consume in air travel is related to keeping the plane or the helicopter, in the air.
Yeah, that'd be a big.
If you didn't have to do that, and all you had to do was move forward and backwards, it's kind of a big deal.
Yeah, I stand corrected.
The Jetsons probably had lots of fermions.
But how do we know this story's not complete baloney?
Which one?
The Microsoft
it's
story, excuse me.
Oh, the Microsoft one?
Yeah.
I have no idea.
How are prospective investors or existing investors supposed to internalize this? What are we supposed to make of it? And when does this become operational? Is it a decade? Is it a century from now? If they're pursuing it, if they're putting capital into it, presumably they think it's got some... It's got an application within a reasonable time frame, 5 to 10 years. But it's really hard to make heads or tails out of stories like this. And we see them, I don't know, once every couple of weeks maybe, about some unfamiliar technology that honestly you need a PhD to interpret.
Yeah, it's tough to make any sense of this and whether it is in any way investable, useful, or just, hey, we're generating a story because the AI thing's fizzling out and so we're, trying to turn the sites to quantum computing.
Yeah, I'd put AI in the same sort of category of maybe, but no one writing about this or commenting on it in the media has enough expertise to distinguish BS from sort of something that's credible and operationally feasible.
No, I'm just happy that, later today I'm going to go and spend some time with the Fermions and we'll have a good time. Let's take a quick break. When we come back, we'll do a little bit of Stack Roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing & Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that will help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit DAV5K.Boston to make a donation today. And make note for this year's 5K to be held on Saturday, November 8th. That's DAV5K.Boston.
Mark, what do you got for me for Stack Roulette?
Chuck and folks, if you're thinking about cheating on your taxes, this might be the year to do it. The IRS starts laying off employees today. It'll start with about 6,000. That's less than 10% of its 83,000 person workforce. But presumably, though they don't say, some of those hired in the past couple of years, and that's who are being targeted, of course, were part of the previous administration's, the prior administration's efforts to step up enforcement, which historically, by the way, has been money well spent. For every, dollar the IRS spends, they typically recoup several in stepped-up
The estimates
enforcement.
that I've seen is for taxpayers in the bottom 99% of taxpayers, it's every dollar of enforcement returns $5 in revenue. And for those in the top 1%, every dollar of enforcement returns $12 in revenue.
Yeah, so I have mixed feelings about a story like this because, to me, the best margin, the best income tax rate would be 0. I don't like it. I wish we taxed consumption. That's just my personal predilection.
Sure,
it means nothing. Just my personal 2 cents.
Yeah.
So while sure, in theory, hamstringing the IRS by depriving it of enforcement resources, that people who, like me, don't like the income tax might cheer that. But then I realized that, well, sure, then the next administration's just going to beef it up again. You need to if you don't like taxes, you need to change the law. You don't dull enforcement because that can always be reversed. Plus, it seems short-sighted at a time that we're trying to close the budget gap. But whatever my 2 cents, the IRS is starting substantial layoffs today.
Delta offering $30,000 to passengers on the plane that crashed at Toronto Pearson International Airport on Tuesday. And I got to tell you, if I was on that plane, I'd be holding out for more than $30,000. It is remarkable.
Seems low, yeah.
It's remarkable that no one died on that plane. So you ended up with 76 passengers and 4 crew members, all survived. 21 passengers were taken to the hospital. All but 1 have now been released. So, again, just remarkable at this point that that was not worse. But I got to tell you that Delta's also saying, look, this won't preclude you from filing a lawsuit or anything. But I got to tell you, if I went through that, I need more than that in order to move on from that kind of experience.
Yeah,
just my personal
opinion. Never take the first offer, right?
If they're offering this 2 days after it happened, it's like, okay, like they know it's not good, and we'll have to see exactly what ends up coming of this. But obviously, this thing I would be looking for more. That's all I'm saying. If I had to go through that on a flight, and again, still remarkable to me that there were no casualties as a result.
No, that you said they won't force them to sign some sort of liability waiver or whatever they call that when you get an insurance check? Sorry.
No, similar thing was back in 2013. There was an Asiana Airlines flight that made a similar offer, and this was for a $10,000 payment, and said that the payment didn't preclude them from filing lawsuits, and they ended up with dozens of lawsuits filed and a bunch of confidential settlements, it sounds like, as well as a result of it. So, this one was just not good.
So it doesn't bind anybody to anything. Why would you take the offer? Or why would you, if it didn't, as you say, preclude you from filing a claim or being part of a class action, why wouldn't you take the offer and then just sue them the next day? Why would they make the offer? Asked differently.
Well, I think they're making it to try to, get some people to not, sue, obviously. But again, just like for this particular episode, it seems light.
Yeah, it's like free peanuts for life or something. That's not going to do it.
How'd
you like a pillow?
Pillow sounds nice.
Pillow
sounds nice. Throw in a pillow and we'll sign. Yeah, throw in a pillow, we'll sign. What else you got, Mark?
Well, Chuck, let's see here.
Doesn't sound like
Chuck,
it.
what do you have? I was drawn to the Delta story, to be fully honest. What's on your mind, Chuck Zodda?
What do you think about the Trump administration talking about getting rid of the penny?
I think that and the nickel, for that matter, as well, some have estimated would be cost-effective to do away with. Are there any strong defenders of the penny? Is there like a Lincoln advocacy group out there that's deeply offended by it, or people that like the American buffalo that don't want to see the nickel eradicated. There's no interest group lobbying to preserve these things.
No, the penny cost the U.S. Mint 2.7 cents per coin after accounting for its value. The nickel, 8.8 cents per coin. So ideally, both of those kind of problematic. But when you consider how many were minted, it still resulted in a $100 million net loss for the federal government. Not really the biggest issue we're facing. Quick break here. We got, actually, long break here. We're back tomorrow on the Financial Exchange.